Alan Neckman of Agora Financial joins us now for his trade of the day. Before we get to that, we have to talk about what's happening with the broader market. Now, we have had some selling going on, some pressure in the market of late. What do you make of that, Alan?
But we've seen bounces back, and that's a very healthy sign. We're still in a buy the dip market until proven otherwise. Let's see how we go the next couple weeks.
But how much is the broader market really playing into your stock trades?
Yeah, it's all about the macro market right now. So there are a lot of variables that we're focused on that we'll see if they can get sorted out. We've got options. We can ride through the ups and downs. For October, we've got Starbucks, Facebook, and Hewlett-Packard. November, we've got Verizon, AMD, Exxon, and the Russell 2000. So we're in position, and we've got to let the markets do their thing. I'm looking for a relief rally, so let's see where we go.
And then way out there in December, you have a play on with FireEye.
Right.
Taking a look at your WPI trade trigger, and this is your play of the day. Bank of America, why that stock now?
Well, that stock's been keeping pace with the Dow, up about 15%, but it is 10% off its high. So it's got some upside here, trading between 26 and 30, so that targets 34 on a breakout. Back in April, it did hit 31. Now, this is a company that makes money. You talked about earnings. They had $7 billion profit each and every of the last 4 quarters. So at some point, people are going to realize there's value in this stock. I'm looking at the 26 call for December. Again, like you talked about, plenty of time, I think 70 days, and it's only an extra $25 more than the November option. So the question is, why not? Of course, we're going to buy the December option and look to see if we can get a big bounce off this sideways stock.
And you always look for big profits and the billions to come from the banks.
Yeah, the banks have been printing money, and I think people have kind of ignored that or become immune to that fact. In each and every quarter, they lead off the quarter with how many billions, and we're talking pure profit, not earnings, pure profit. So $7 billion, that gets my attention, and I think people are going to start paying attention to Bank of America.
Well, we're paying attention to you. Let's get your trading floor takeaways.
Well, I grew up on Lake Superior, so I've always been warned about the gales of November, and so I think we're seeing a little bit of that now here as we end this October season. So number one is 15 fun. The 15th is when earnings season starts, so the fundamental facts will be front and center once again, and there'll be less of this emotional noise.
Number two.
Rate date, October 30th, they're going to cut rates. Now, that is interesting because it's the day before the Brexit deadline, and it's also the day before tariffs are scheduled to stair-step if there's not a solution. So, obviously, they have an advantage that if they have some inkling that there's going to be some additional volatility, they've got some room to continue to cut rates and act as a stimulus, and that's the Fed's job, is to keep things in balance.
Could be a scary Halloween. Let's take a look at number 3 for you.
20 time. Now there's the fear factor. The fear factor of the VIX is pivoting around this $20 level. Last week it was negative. $20 is really important from a psychological level to watch on a weekly basis, but we've been able to maintain below that, which is very important. If we have a sustained period above 20 on a weekly basis, then that may be cautionary, but for right now, I view it as a positive that we remain below that.
All right, good deal. Good to have you here.
Thank you.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.